First up, let's go to Nvidia, ticker symbol NVDA. You know it. Accusing the Biden administration of threatening innovation and economic growth as the White House unveils new export limits on the sale of AI chips. The rules establish caps on the amount of computing power that can be sold to most countries and are set to take effect in 1 year. Nvidia's Vice President of Government Affairs, Ned Finkel, writing in a blog post, quote, "Rather than mitigate any threats, the new Biden rules would only weaken America's global competitiveness, undermining the innovation that has kept the U.S. ahead." There you're seeing that statement in part. He goes on to write, while cloaked in the guise of anti-China measure, these rules would do nothing to enhance U.S. securities, and the new rules would control technology worldwide, including technology already widely available in mainstream gaming PCs, consumer hardware, and ultimately talking about how this limits or weakens, from their perspective, America's global competitiveness.
Yeah, Brad, what stuck out to me in this statement here from NVIDIA, and also what we're hearing from industry inside groups, is just the focus here. They're looking past the Biden administration, really trying to appeal to the Trump administration. We're 1 week out from the inauguration. And within the statement, that very last paragraph here from NVIDIA, they talked about the fact that they said, quote, "As the Trump administration demonstrated, America wins through innovation competition by sharing technologies with the world, not by retreating." Also went on to say, "We look forward to a return to policies that strengthen American leadership." Semiconductor Industry Association was also very quick to criticize this rule from the Biden administration, also focusing their efforts, suggesting that new policies should be designed by the incoming Trump administration. So they're doing all they can to appeal to the incoming administration, trying to get incoming President-elect Donald Trump here to potentially appeal some of these laws that will be put into place. In terms of the context of how big of a deal this is for NVIDIA, you can see the reaction on the screen right now, off just about 4%. A lot of this is just some of that jitteriness that we're seeing surrounding the market about what that backlash is going to look like from China, how far and how deep some of these back and forth tit for tat curbs can go here, and ultimately who is going to then be holding the bag, who's going to have the biggest impact, or who is going to suffer the most from these. And you could take a look at even just NVIDIA's concern from this. It's obviously a challenge, a headwind that they are watching very closely.
Yeah, about an 11% drawdown since last week. If you take a look at the 5-day chart, we should also note that this company did just see a new all-time high last week. And so we'll see, even with this response to the outgoing administration, how they're able to be successful in cozying up to the incoming administration.
This most likely indicates that the company reduced its investment because the stock had undergone a substantial increase in value, or because they wished to lower risk or preserve diversification by adding a pullback. Price: the company is utilizing the chance to reinsert itself in the role. A retreat is frequently interpreted as a chance to purchase shares at a discount, particularly if the investor is still optimistic about the possibilities for long-term growth. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
NVIDIA CEO Jensen Huang in visiting China this week as the White House announces new export limits on AI chips. The new curbs causing shares to sell off over the last several days here. How do you view these new rules impacting NVIDIA and other chip companies in the year ahead?
First of all, it's pretty unclear and it's unprecedented. And what I mean by unclear is the ruling relates to semiconductors that either are purpose-built for AI or are designed for AI. And that would put all gaming chips, for example, in that category. They might be primarily designed for gaming, but they're very much designed to have AI capabilities in them. And on the unprecedented part, you're looking at 120 countries, many of them sitting in the EU, like Portugal or even Mexico that now have limits on that. And this is all going to be managed by a government agency. And I can't think of a worse thing for innovation and speed and revenue than having a traffic cop. I think we're all in on national security, but this is the wrong answer, and I fully expect the new administration coming in to overturn most of the onerous elements of this and maybe provide some clarification.
So then, Patrick, I guess then that would lead me to believe that the market's reaction might be a bit of an overreaction if you are confident that we are going to see a quick change once Trump does enter the White House.
I mean, 2 or 3%, and on Nvidia, and Nvidia was sliding based on the perceptions coming out of CES 2025. I think investors took it as a non-issue or a wait and see until the new administration comes in.
Okay, so all of these things considered, how are these companies going to be navigating some of the international relationships that they've also communicated to investors is baked into some of their own growth anticipations as well?
Well, if this moves forward and it goes into effect in 120 days, unless the new administration comes in and squashes it or slow it down, is they have to hire a bunch of consultants to figure out how to manage that. There's a 128-page document that lacks a bit of clarity. And what they're going to have to do is every company is going to come up with their own strategy to deal with this. A lot of companies aren't going to have an issue because they have nothing to do with clusters. But when you look at AI clusters, but when you look at companies like NVIDIA and AMD, they're going to have to get, and even Intel, they're going to have to get very clinical on exactly how many chips that they can ship into a certain country. And I think the EU's response, that's typically pretty onerous and heavy-handed, they're even saying that this move is a step in the wrong direction and can potentially shift them in the hands of buying more from companies like Huawei, which is exactly the opposite of what this IFR is supposed to achieve.
Ned Finkel, an executive at Nvidia, has expressed concerns that the Biden administration's new regulation plans to restrict the export of AI chips could tip the scales against the U.S. rather than in favor of it. According to national security, these actions could unintentionally intensify the competition for alternative technologies worldwide. Supported by recent data, the proposed regulations seek to establish rigid tiers that limit chip exports while promoting partnerships under Washington's criteria. According to Bloomberg Research, these regulations may be a crucial tactic in bringing U.S. allies together to create AI. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
All right, joining me now, Mark Newton, Global Head of Technical Strategy at Fundstrat Global Advisors. Mark, good morning. Thanks so much for joining us.
Thanks, Frank. Great to
All right, so we just heard Rick Reeder say the market's got some pretty good footing. He sees, more upside to come. We actually want to look at some areas of the market where there's been a little bit of pressure, and you also see some upside. Why don't we start with the S&P 500?
Sounds good, Frank. Let's take a look at the S&P.
Yeah. So, Mark, if you don't mind, if I start. For the last month, S&P down. We're going to go over here. A little bit of weakness, down about 3.5%. But you're saying there's an upside trend overall that you're bullish on.
Yeah, I agree, Frank. When you look at the longer-term trend, despite all the damage we've seen in the market this year, starting really last December, we've not really seen sufficient evidence of the market truly breaking down. That's thanks to technology. So 5,700 is really an important spot. Any sort of weakness into CPI, that would be something investors really want to consider, that, trends have not shown sufficient deterioration to turn to negative at this point.
So does that signal we're going to see a bounce in the S&P 500 after CPI in your mind? Is the momentum just going to pull us that way, even if we get a hotter than expected CPI, or is it dependent on the CPI report?
So look, Reader has his fundamental thoughts. I have my technical thoughts. Both of them say that markets are near levels within 3 to 5 days where we're going to bottom out. So longer term trends remain intact. Sentiment's gotten a little skittish. Technology, to its credit, has been able to hold the market up. That's a great point, and really a reason why we're likely to stabilize. Significant support down near 5,700. Not only does it line up with last November's lows, but also lengthier long-term uptrends just from 2023. So really, really good support is a good time to buy, in my view.
Sentiment might be a little bit more than skittish. I think the VIX is up to about 20 right now. So a lot of index investors especially are going to be glad to hear you say that there's going to be a bounce in the S&P 500. We want to move to one of the most widely held stocks in the market. That's Nvidia. So I was just looking at the charts myself. I'm not a chart master like you are, but I was looking at the charts myself. Since CES, which is a very small part of this chart, I'm looking at Nvidia down just about 8% since there. We all thought that alligator jacket would lead to a rally. I guess it didn't. But you're saying there's a trend here that you're seeing as well that's setting up Nvidia for a potential bounce.
Yeah, so despite a lot of the carnage we've seen in semis since last July, I mean, look at Nvidia. This continues to be a standout leader. And similar to the broader S&P, the stock has pulled back to almost exactly where it needs to think that, okay, it's a great risk reward. Short-term weakness, but no longer-term trend damage. Investors want to be buyers into this pullback.
All right, so I just want to ask you this. Nvidia is a chip stock. These are cyclical stocks. So when you're looking at the technicals of this stock and you see this trend, any concern that the cycle comes to an end at some point, and that's the downturn?
Well, we have to let the stock tell us that. Okay. And unfortunately, we can't bet against ongoing uptrends. Most of the stocks is down about 15, 16% from its July peaks of last year. Nvidia still within striking distance of all-time highs. So, it seems like a very severe short-term pullback. The key lesson for investors is always put the short-term price movement into context of what the longer-term charts are showing. And so the longer-term charts show this remains in great.
Finkel, however, argues that the wide nation cap would interfere with the normal functioning of even the most basic data center computers, recommending this course of action. Instead of receiving praise, Nvidia and its rivals should prepare for repercussions that could change the competitive dynamics in this crucial sector and affect the entire semiconductor market. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
You're looking at NVIDIA and you're looking at Apple. Let's talk NVIDIA first, because I do think, to Matt's point, NVIDIA did get hit pretty hard since the CES thing. It's down near the low end of the range. It seems if you think the market's going on a big run, maybe not a bad time to think about re-entry into NVIDIA.
Yeah, correction territory, down, about 13% from its recent all-time highs that we saw on that CES day. Remember that, about $153. But implied volatility levels really low in there, even though we've seen the stock slide. The IV percentile rank is about 6%. So in the lower 95th percentile of what we've seen implied volatility levels over the past 52 weeks. So that gives you some opportunities maybe for directionally biased trades based on your assumptions because they're going to cost a little bit less, right? Because implied volatility levels are low. So I went out to the February monthly cycle that expires on the 21st here as an example. They report earnings the week following this expiration. So if you expect the stock to maybe consolidate and start to rebound from these levels, this takes advantage of it over the next 37 days. Going out to that February monthly cycle that expires on the 21st, buy the 133 strike call. That's basically at the money. And then against it, because I want to offset some of my costs on that bullish call buy, sell the 143 strike call. So buying a $10 wide bullish call vertical to the upside, you're paying roughly about a $3.80 debit for it. So there's your risk. That can expand to $10 if this thing if this stock goes back above 143 at expiration. And by buying this vertical, it gives you some flexibility as far as trade management goes. Say you get a pop in the stock, it goes up to 140, this thing doubles in value or expands in value. It gives you the opportunity to close it prior to expiration if you want all or a portion of your position. But this is a bullish way to take advantage of that low implied volatility while offsetting some of your costs by selling that 143 call against the long 133 call.
All right.
The crucial question is still how these changes will affect the stock's future trajectory as Nvidia and other semiconductor titans negotiate these muddy waters. The majority of forecasts show a strong outlook for Nvidia, characterized by its strong market positioning and ongoing innovation streak. What do you think about all of this and the implications it holds for the future of the tech and AI market? Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. I hope to see you there. Analysts predict that despite short-term turbulence, Nvidia's shares will demonstrate upward momentum fueled by ongoing demand for AI technologies across various sectors.